a busy time, and with that in mind, a question for both you and Steve. Where do you see the biggest growth in multifamily investment over the next 12 to 18 months?
I think it's across the board. Clearly, the softness in the market is on the high end. I think a lot of the new product that's coming on is starting to struggle because the rent growth isn't there. The most active part of the market on a consistent basis for Arbor is always the small loan side. The people who are buying these assets are buying them regardless of the environment. So that is always an active part of our business. But workforce housing is clearly for us the most important aspect of lending, and one that will continue to be an active part of our business and grow very dramatically.
Steve, are you seeing something similar?
I think one of the things I think about is when you hear supply numbers, and you look at some of the supply numbers and you'd say, well, there could be an impact there. I often wonder how much of that supply is small balance loan. I think the answer is probably not much, if any. Nobody's going out and specifically building a 5-unit asset these days, right? They typically are around to be improved or converted from some other purpose. So the supply numbers, to me, although supply, I suppose, brings up sort of all the sea brings up all ships in the sea, whatever that analogy is. But we see growth, and I think that you look at the numbers themselves, and you'd say that places like San Francisco, Seattle, LA will continue to be strong, as will New York City, Brooklyn, those areas. But some of the places that get lost in this, there are deals to be done in Iowa today that you and I aren't looking at, that we're going to go out and try to find those deals. So and doing a couple of deals in Ames is what we're all about. So sure, supply's out there, but I see a ton of opportunity where we're just sort of knocking on the door. A lot of product out there. So.
With that in mind, Ivan, from your perspective at Arbor, where are you seeing that critical mass of activity? What are your top small balance markets?
So I think one of the interesting concepts here is that a lot of lenders are in the market, they're out of the market, and the small balance borrower has always been underserved because he hasn't had a consistent place to go to. With Freddie Mac making such a big effort and bringing standardization, a variety of products, and consistency to the market, we are developing a tremendous base of borrowers in areas like California, Texas, Florida, of course, New York, and we're becoming the go-to guy. When somebody goes to buy an asset, they know we have the product offerings. They know they're consistent. They know they will get done. So it's as though we've created a consistent market, and we've allowed borrowers to go out and buy very actively. And as I said, they come back not once or twice, 5, 6, 7, 8 times in a year. So those are the markets we're really active in. And as Stephen said, there are a lot of other markets that we're beginning to dip into, whether it be secondary and tertiary markets as well, which are clearly underserved. So I think this business is just going to grow across the whole nation.
Right. When your base of partners and clients and borrowers really runs the gamut then from the small balance borrower that may be getting a $2 or $3 million loan to the largest institutions in the multifamily space. Tell me a little bit about how that small balance borrower is different from the large institution.
I think one of the things and why automation is really important is they're a little less sophisticated. Data collection is a little harder. And I believe the automation helps them on the data collection side. So it's not like they have all the records in the accounting departments that the bigger borrowers have. So being able to communicate, from terminal to terminal will cut down on a lot of paperwork back and forth. And these are not institutional borrowers. Some own 3 properties, some own 8, some are just starting out, some are partners with other people. And we really help them in building their business, specifically at the early stages.
Well, one of the background questions that I think a lot of folks are asking relates to sort of our position in the cycle. This business is growing. We may be getting a little late in the cycle at the same time. We have just a couple of minutes to talk about this so that we can get to some of our listeners' questions. But Ivan, Steve, where do you see us in the cycle for small balance, but the macroeconomic context as well?
Good question, and I think if If I had the answer to that specifically, I would make the right bet. Look, we believe it's a strong market. We believe that that, as Ivan mentioned, it's underserved. So it's a little hard to think that where we are necessarily in a cycle, because I think it's a sort of misunderstood section of the market, not as understood as it is going to be in years to come, I hope. I don't know, Ivan. That's a tough one to answer. What do you?
Well, numbers don't lie, and cycles are cycles, and history always repeats itself. And clearly, we are approaching the second longest expansion that we've seen. It's about 81 months. Things seem very strong still, but history is history. Cycles will repeat themselves. We're definitely seeing a change in the upper end of the market. What we like about the small balance loan side, since they're not creating new housing, they're taking existing housing and serving a particular niche. We think it's very strong, and we think it's very resilient, and it's going to be very, very consistent. So to the extent that Freddie Mac will continue to support this market and will have a consistent offering of products, we really believe that this will be the most resilient part of the market, even if there is a downturn.
And I think maybe the way this is Steve again, I can answer this question a little better is how we performed through the last recession. And I think the point to that is Freddie Mac's performance was outstanding. It was beyond anybody's thoughts. In fact, at one point, I think we had maybe 26 REOs of this massive book of business that we had. So the point to that is we understand how to underwrite, to be able to put people in properties that they're going to be able to keep, that are going to perform through stressful periods. We did that with the last Great Recession. We took that credit culture, we applied it here. We're inspecting every single property. That alone in this business makes a significant difference. The G&A is there for it, but we think it's awfully important. So we've applied that culture that allow us to come through the market and maintain the liquidity that was necessary to keep it from going over the edge. And I think that's incredibly important. So rain or shine, we are going to be there. I think we've done it before, and we're going to sustain it again.
So Freddie's making a long-term, very clear commitment to this space. Ivan, do you have any specific advice for that small balance borrower?
I think the advice for the small balance borrower is to make sure that in terms of management of these assets, knowing their market, that's essential. We're in good times now. Things may get a little tougher. Make sure you have good management companies. Make sure you have good reporting, and you understand your market, and you put aside a little money for a rainy day.